Using work of an internal auditor. This is based on standard SA 610 using the work of an internal auditor. This provides guidelines to the external auditor regarding procedures to be followed in making use of the work which is performed by an internal auditor. It also explains the responsibility of the external auditor in regard to using the work of an internal auditor. And this is actually based on the accounting standard, accounting and audit standards, which is SA 610. What is internal audit? Internal audit is a separate part of internal control systems, and its objective is to determine whether other internal control systems are properly operated and well designed in the overall control systems that are in place in a concern or a banking company. Internal auditor is part of the overall organization and appointed by the management or those charged with governance. The scope of an internal audit is normally limited to review of accounting systems, review of related internal control, examination of operating system, examination of financial controls, and physical examination of control and its verification. CARO or CARO. CARO is company's auditor's report order, and it specifies a new format for the issue of audit reports in the case of statutory audits of companies under Companies Act 2013. In the case of listed companies or other companies having reserves and paid up capitals exceeding rupees 50 lakhs at the end of financial year concerned, or having an annual turnover of rupees 5 crores or exceeding for a period of 3 consecutive financial years, the auditor is required to report as per CARO guidelines, whether internal audit or external audit in terms of size and nature of business. Internal and external audit. Internal auditors differ from external auditors in terms of objectives, appointments, scope of audit, and independence. The objective of internal audit is to ensure that it has already covered the policies, procedures, and internal controls and is laid down in the audit form and reports, whereas external auditor expresses explicitly an opinion on financial statements and announces that those statements show true and fair value as represented in balance sheet and profit and loss. In terms of appointments, the management appoints the internal auditor, whereas external auditors are appointed by the shareholders of a company. The scope of audit of internal auditors is prescribed by the management, whereas the scope of external auditors is prescribed under relevant law. Independence in the style of functioning of external auditors is more when compared to internal auditors. Statutory auditor using work of an internal auditor. The statement is an agreement that the external auditor has sole responsibility of his reports. However much of the work performed by internal auditor is useful in terms of examination of financial statements. The external auditor's responsibility is not diminished, and the state of reliance on internal auditing goes high, is in full agreement in terms of the subject matter in this regard. Finally, documenting information. When the external auditor uses work of an internal auditor, he shall document the fine aspects and conclusion of the adequacy or the breadth of work of the internal auditors and of the audit work and its importance of the work performed by the external auditor in any circumstances. So this completes the section on using work of an internal auditor. Thank you.